Joanna Macy, the great environmental activist and systems ecologist, said that when faced with planetary crisis, there are three stories we can tell ourselves. Business as usual, in which we tell ourselves that some degree of damage is necessary for human progress. The great unraveling, in which we tell ourselves that mass ecosystem destruction is inevitable. And the great turning, in which we tell ourselves that evolving the way we live is the only way forward, and that we're at the beginning of one of the great projects in human history. On this podcast, we talk to people who are writing that third story, with their own work and their own lives. Mission-driven leaders who are dedicated to social and environmental impact at this critical moment for our species. Welcome to The Turning Point. Yeah, so Ian, we've had obviously a lot of founders on this show in its first several recordings. And one of the topics that continually comes up is funding, especially for mission-driven businesses. Squaring the financial needs with the mission is always a bit of a challenge. So we've been wanting to have someone from the funding universe on, but not necessarily somebody who's just a VC, right? So we're lucky here in the Twin Cities to have Hill Capital. It's a company that is a bit more focused on the needs of growing small businesses and trying to come up with more creative ways to fund those businesses. So lucky today to have Patrick Donohue, managing partner and CEO of Hill Capital. And he's a guy who, by his own admission, started in big finance, a little bit infatuated with Wall Street, and realized that he needed to create something a little bit different to support entrepreneurs that he felt he identified with.
Yeah, I think we've observed in our work with clients and in many of the conversations that we've had, with the mission-driven founders that we work with, which is, I like to kind of refer to it as a no man's land. To get a business from 0 to $1 million, it's often just a lot of hard work. And we've seen a number of clients kind of get stuck in that 1 to 3 million range. Because in order to scale up, it's not only a matter of systems, but it's also about understanding capital. And there's a whole world of finance and capital in small business and entrepreneurship that isn't just the really glamorous venture capital major funds that turn into these unicorn companies that IPO for $1 billion. Like, there's so much. And that's actually the small fraction of the reality, right? So I think it was good to have this conversation with Patrick and to speak to that world of finance in small or mid-sized businesses and recognize that there are many other vehicles, right? Finance vehicles within this realm of business that don't often get talked about a lot, but that definitely deserve some attention.
Yeah, and I also appreciated his general perspective on what it takes for some of these businesses to get over that hump we talked about, right? And it was interesting to hear somebody from the investment side cover a lot of the same topics that you and I are covering when we are working with founders. And, really supporting the idea that it's a very challenging world out there to be a founder trying to grow a business. Not only do you have to do the hard work of creating your impact in the world, but managing all the day-to-day, understanding the finances, figuring out how you're going to raise the capital you need to grow your business. And it's great. And it's just great to hear somebody from the investment side who's really supportive and is an open door and is really ready to support growing business owners.
Yeah. And if we have anyone who's listening who cringes at the idea of finance or numbers or business, I would say still give the episode a listen. He talks a lot about, kind of the values behind money or the incentive behind money rather than the numbers themselves. And so I would agree that it was good to have a conversation with someone who has the perspective of, what does it take to get to a place of good numbers rather than what do good numbers look like out of the gate. So it's kind of a bottom-up conversation around finance. And then the last thing that I want to mention, Justin, is I think it's important to put a caveat or a disclaimer at the beginning of this conversation, which is we recognize that economic models and incentives around economic models are not always perfect, nor do they promote equality, right? There are inequalities within the system. And we just I think it's important for us to name at the beginning of the conversation that those tensions exist and that this conversation took place within the confines of how can we do the best that we can do within the current model, right? So this isn't hey, let's burn capitalism down and build it back up from the ground up. This is where are we at now and what do we need to do and how do we need to think about aligning incentives within our current existing model so that we can take steps forward and make progress both socially and environmentally.
Agreed. And if you're listening to this and you have another perspective about financing businesses that is more equitable in your eyes, by all means, email us. We'd love to have that guest on too.
Yeah, absolutely.
All right. Without further ado, please enjoy this episode with Patrick Donohue of Hill Capital. All right, Patrick Donohue, welcome to The Turning Point.
Thank you. I appreciate it. Good to be with you guys.
Yeah, it's a pleasure to have you.
Yeah, really excited to have you here. As mentioned, we've been looking forward to having someone from the funding side of the equation on the show, talking to us a little bit more about what's going on in the world of capital and something that all of our founders are often interested in.
Yes, well, Justin, Ian, I appreciate it because you guys, your work is really important, and of course, I've listened to several podcasts and people talk about missions and so forth. But the money behind it, there's a lot of interesting topics that tie into this. So, really happy to share some of the insights around capital and building value long term.
Great. Yeah, so let's start kind of with the bigger picture.
Yeah.
It seems to us, we are not finance experts, but it seems that a lot has changed in the economy in the last few years, right? We went through the COVID pandemic, then there was a big inflation situation, a lot of big swings in federal policy since the last election. So how would you describe the current environment for entrepreneurship and maybe how it's changed over the last few years?
Yeah, I would encourage people to really think about this in terms of like there's always swings, there's always changes, there's always macro and micro issues that are going on that especially I think are most they hit and impact small business owners the most, entrepreneurs the most. And there's always swings. And so I could definitely go into details over the last few years on how there's been changes in the economy, but I could actually tell probably both sides of the story where it's probably helped some and it's hurt some. And what I would just say is that there's always those cycles, and that's just the way the world works and the economy works is when one thing happens, it's going to be to the benefit to some and it's going to be harmful to others, and those things do swing back and forth. So inflation can be challenging, but I'll also share deflation is even more scary. So some of the inflationary things that we've felt and dealt with are not fun. They have not been easy, but those problems, I would say, are way better than the opposite. So we'll always have problems and challenges in entrepreneurship, but we also have to remember to step back and look at the big picture and realize how blessed and lucky we are in the big picture of things.
That's a good point, right? There are certainly worst case scenarios. It seems like even in the worst of times, this country has been pretty favorable to business formation and growth, right?
Yes, and so actually, if people, one of my mentors, heroes, is Warren Buffett and Charlie Munger. I've gone to the Berkshire Hathaway annual meeting for many, many years. Warren Buffett has always talked about don't bet against the United States, and he went into some detail at the annual meeting in May of 2020, which of course was held online, and would really encourage people to to look that up or to listen. And there's a lot of Buffett and Mungerism, as we like to call them, out on the internet. But I always think that's really important is just there's always going to be challenges with the United States or any economy, any country, micro, macro, but I always have to take a step back and just appreciate how lucky we are sometimes. And why sometimes I deal with this a lot because I know you guys do a lot with mindset, and super important is you just have to stand back sometimes. And sometimes I feel blessed for some of the problems we do have because in the scheme of things, they're not all that bad. It just has to be contextualized like everything in life.
Yeah, I guess that's particularly good perspective right now. Thanks, Patrick.
Well, yeah, I think we're all thinking, I don't want to timestamp our conversation here today too much, but there's always things happening that we have to keep these things in mind.
Yeah, but sticking to the economy and to entrepreneurship. So I think it's a thread you just hear a lot in the American ethos that the entrepreneur is very lionized and really celebrated. But I'd love to hear from your perspective what you really think are the benefits of supporting entrepreneurship and why Hill Capital seems to view that as a general societal good.
Boy, there's a lot to that question, and there's a lot I could say, but hands down, I'm pretty positive I'll go to my grave saying there's really not much better than entrepreneurship. To be able to empower people to take risks and to appropriately balance that risk and reward and hopefully ultimate reward for the risk that they took to start something. Well, the builders and the makers, they should be highly celebrated. Media, so I think a lot of times they're celebrated in ways that are annoying, misleading, so on and so forth. It represents the 0.01% without a doubt. It's the big tech companies and so forth. But, the people who are on Main Street and the people who are coming out of universities and grinding it out. And several of your podcast guests, like Andrew Jones, is a great example. Somebody that's, been grinding it out and making things that have big impact, but they're tiny, small businesses in the scheme of things. But that's what makes up the vast, vast majority of entrepreneurship. The people who are out there, just making it happen. There is a huge net positive benefit. I could go on a bunch of things, but one thing I'll point out is people that think about like recidivism. People who've had challenges because they may not be employable. And those people need economic income. And one of the best things for people coming out of jail, immigrants, all across the board is entrepreneurship. Young people. So it's starting a lawn mowing business. It might be selling, hot dogs on the street corner, whatever the case may be. But there's really nothing more economically empowering than entrepreneurship, hands down. We can't have society relying on others to give them a paycheck or a government to do a handout. Hands down, I'll say that all day long. To me, that doesn't work. And there's pros and cons to all of it, but there's the best net benefit to entrepreneurship.
Yeah, and thanks for bringing up some of our podcast guests, Andrew Jones.
Yeah.
We appreciate the shout out.
Well, a huge shout out to him. I have a deep respect for Andrew. Yeah.
He's doing great work.
Yeah.
Yeah. So on that note, I'm just curious if you've thought about specific gaps in the market or specific problems that entrepreneurs are maybe particularly positioned to solve versus some of the big players in the market.
Yes, everything. Entrepreneurs are the best set up for this. I love some of the work, like Mark Cuban has talked a lot about this. I've gotten the chance. I spoke at a conference, the Global Entrepreneurship Conference, right before Mark a few years ago, or this past summer, and would highly encourage people to watch that interview of Mark. And and he goes really deep about how entrepreneurs, they are the problem solvers. I mean, it's the typical, they see an issue and then they've got the right balance of motivation, insights, and freedom to go and tackle those things. Big businesses have never really been well set up for it. Government definitely isn't to a large degree. You just look at the other options, like where and how some of these sticky issues are going to be solved. The nature of who the stakeholders are and where incentives are aligned or misaligned, they're just nothing better than entrepreneurship. And like all things, there's flat spots and so forth, but you just go across the board and look at any societal issue, I would say it starts with entrepreneurship. And now one could actually get into the whole question like for-profit, nonprofit. To me, that's always been a moot point. That's his tax status. That doesn't matter. I could start a B Corp, a nonprofit or whatever. It's the human being that's doing it behind the scenes. I agree with Andrew, by the way, on his podcast. He made a point to say for-profit entrepreneurship has the most likelihood to succeed and scale. I hands down agree with that. And I'm happy that Andrew brought that up and said that because I've been on both sides. And I agree. I mean, nonprofit and benefit corps and so forth, they can work, they do work, but truly at scale and largest impact, I think, is in that for-profit entrepreneurship category.
Thanks for segueing us perfectly. So
yeah,
that sounds like maybe one of your first pieces of advice, right? For a mission-driven founder, maybe you would consider a for-profit at least the first option.
100%. Helped start a few nonprofits, and it's been exceptionally hard. In retrospect, I have a feeling they'd be around today if they started nonprofit, or if they started a for-profit. When I help them out, you would think that it would be easier because, people can donate money and it's like pull the heartstrings like first and foremost. Well, it's not. And it's not as easy to get money in the door. And there's a lot of money in this world that will go towards just, furthering a mission and impact and so forth. But boy, if you really want money to move in this world, tie it to an economic incentive long term where people can share in the reward of that thing becoming a reality. Then the real money moves.
Yeah, that makes sense. So while we're on the topic, could you start maybe giving us a little primer on some of the specific challenges right now that entrepreneurs are facing and maybe some of the ways that Hill Capital uniquely supports them?
Well, I'll just say, again, I don't know if it's necessarily right now, but I think it's always, to a certain degree, it's the amount of distractions that entrepreneurs face. Now, a lot of them are ADD-ish, like their attention gets distracted easily. But I think with society and social media and other things, they can get pulled in a lot of directions that pull them off target and off focus. And I know it because I deal with it all the time, and so I would just encourage people to really kind of think about where they're being pulled and why, and what is the incentives for those who are trying to pull them in other directions. One of the biggest challenges all entrepreneurs face, and of course I can only speak to here in the United States, but I know this would be anywhere, but a lot of the systems in place to be an entrepreneurship and to do so in the right way. It's hard. And I think a lot of people on the outside think like, oh, the United States, it's so perfect. It's easy to start a business and this and that and the other thing. It's not. It's extremely hard. And a lot of the systems and so forth, whether it's doing your business papers or taxes, financials, and all that type of stuff, it's difficult, and there's a lot of hidden traps because a lot of the systems that are in place are not really well set up. They work fine and great for large companies, but especially for startups, entrepreneurs, it's difficult, and it's filled with a lot of traps that are really unnecessary because the task at hand to do the thing that they're setting out to do is hard enough.
So I'm curious, Patrick, like if you could share a little bit about how you think about assessing opportunity.
Yes.
Right. So entrepreneurs are, right, maybe naturally, if they're not by nature distracted, they're in an environment, right, with this kind of infinite buffet of opportunities and decisions to make.
Yes.
So when you're evaluating a company or when that company is evaluating its opportunities, what are some ways that you kind of assess those decisions to make and the opportunities to pursue and the ones to say no to? And then maybe the caveat is like, how does that look different at the different size or stage of the business, right? So like 0 to 1 million, 1 to 3, et cetera.
Yeah, so for us, and a lot of investors will say this, it's really about the people. And so that's why we like to invest in things that have been around for a while. Not that we're scared of startups, but really having some operating history there to really understand how they've shown up when things get difficult. Like that's a huge tell. So if they went through COVID, how did they deal with that? If they got punched by tariffs, how did they navigate through that? You know, how did they show up the next day, the next weeks? Because that's going to help us understand is how they're going to show up as an investment partner. And that's why it's super important. And one of the things that I think a lot about is in terms of like focus, the beautiful thing about capital in investors is it can be very beneficial to accountability and helping with that focus. And that's a big role that Hill Capital plays. We're not going in there dictating strategy and so on and so forth, but when we're showing up every month and saying, hey, you were setting out to get to 500 clients and to go to this conference and so forth, where are you at and what are you doing to achieve those things? That's very helpful. And entrepreneurs, myself included, need accountability mechanisms. Because when they're by themselves, that accountability is extremely difficult. I think as you guys know in your work as researchers and learners and so forth, but you know when people are independent and they don't have other accountability mechanisms around it, it gets darn near impossible. There are a select few human beings that can really hold themselves accountable, but it's really difficult. So that's a really important role for capital, is to help them navigate.
Is that a typical role for a funding outfit like you guys?
Yes, I would say so. A lot don't do it. So there's a lot of investors, especially this world of like angel investors and even to a certain degree, surprisingly, venture capital, because they'll just follow on. They'll wait till somebody takes a lead that will put in a check and they'll put in money alongside it. But they'll just put in the money and then go back and pray for a few years that they get a return and never engage with those founders. But most investors, the good investors, I think, stay in touch and are trying to be helpful along the way. Because that's why when you think about like Shark Tank, the show Shark Tank, a lot of people don't necessarily want Mark Cuban or Lori's money. They want their network. They want their advice. They want those other things that go with it. And it's those intangibles that are extremely valuable. And I think it's very important for the good investors to show up with and to be helpful with those intangibles. And that's a big role Hill Capital plays. That's why on all of our materials, our website, we talk about funding and community. That community is a very important aspect. It's one of our core values. It's very important is like where and how are we surrounding people with community and helping that build that over time.
Justin, excuse me for going down the rabbit hole here as always, but you had talked about you're looking for, business that has operating experience, right? One
Yes.
that's been around a while. So what are some of those kind of core, like what does operational excellence look like? When you're walking into an organization and then this funding is providing some accountability, what is a really well-operated business? Because obviously what we find in our work is that to the extent that the operations are in order really dictates the amount of impact the organization is able to have, how quickly they're able to scale, et cetera. So what are some of those markers look like for you guys?
It's a really interesting question, Ian, because what went through my mind as you were asking it was Hill Capital will likely never be blessed with going into an investment where there's already operational excellence in place. And so right? Because these are early stage companies that are still building their operations and building their systems. And so how I think about it is what they're doing is putting in systems in place to work towards operational excellence, however that is defined for them. And that's what we would be looking for. So if they've got 5 employees and they've got $800,000, they're incurring some losses along the way. That's kind of a stereotypical, company we're investing in. They need to get over a hump. They probably need to get to 2-3 million in revenue. That's where, the role we play is to help them with capital and community and confidence to get to that point. But they're working towards excellent. They're working towards better systems and processes. And that's how I think about community. And that's why even podcasts like this are super important to help them and tip them into starting to think about these things. Like, what am I laying the foundation for today? And what decisions do I need to make today that can make sure I've got this set up in a way that's working well for me, my family, my employees, and the opportunity to create and build this business long term. And so the inverse of that is people who aren't thinking that. They're not thinking longer term. They're not thinking about what am I working towards. They're literally in there, fighting day to day and putting out fires and all that. And so that's the stuff we would shy away from is if they're battling too much and they're not taking the time to understand where they're trying to get to over the next 1 to 3 years, let alone 10 years, probably not going to be a fit for us today, because we don't need that picture perfect business plan. Frankly, we don't even need a business plan, but I do need the founder, owner to really be able to articulate a vision to where they're going and why they're going there. Then I can get behind that, and then we can put some meat on the bone.
Wow, you are speaking our language right now, Patrick. It's great to have you on record repeating some of the things that we say to our clients. This is great.
Yes, well, that's why I love your work, and it's very important because people need to be thinking about these things. It seems abstract for a lot of founders, entrepreneurs, I think, but it's very important for them to take a deep breath, and it doesn't have to be much. Catch one of your podcasts for an hour or two here and there and just start to digest these things. They don't have to go do 40 hours worth of work today, but they need a plan in place to think about it long term.
Yeah. I mean, one of the analogies that we often use is like all of these things that we're talking about here, that are terms that often get tossed around, kind of haphazardly in everyday business, right? Strategy and prioritization, all these things. It's like, it's kind of like the soil, like it's underneath the surface of what we generally see on the day-to-day basis. But without that substrate or that foundation, it's really hard to generate any, like really positive yield above ground. You really need to have a solid foundation. And sometimes it's the unseen, unspoken stuff.
Well, exactly. Great tie into your work around the environment. And you've talked about soil in a few podcasts, but that's exactly right. You need the soil to be healthy to grow a tree, let alone a tree that's going to be there for 100 years.
Right.
And so while we're on this thread, Patrick,
Yes.
let's assume that we have some ambitious founders listening, the kind that are maybe looking for funding in the future. Are there any other pieces of advice you would give them to set themselves up to be attractive to funders?
Yes, I think it's really important for them to know and understand their numbers, even if the numbers are extremely small, but get to know and understand their numbers and then what it is they're looking to achieve long term. They're not going to know to the T how much money they need, but they can start to get a sense of that and then really what the economic engine is that they're building. And I think taking that time to really reflect upon that is important. And then it's all about being able to share that vision and get out there and to have conversations. And the most valuable piece of advice I always feel like I give founders, owners, is to go out there and to talk to several capital sources and to start to know and understand that landscape. And that's why, like when I wrote the book Breakout Valuation, there's a handful of chapters I talk about that, like different capital sources. And I'll bring it back to Andrew Jones. I've known him. I've looked at both of his companies in detail. And, that's a great example of somebody who's been very thoughtful about, where to look for investors. He's had investors across the board, from straight equity investors to debt investors, and he's done a great job. And I know he's thought a lot about this because on your podcast, he talked about doing PRIs. And PRIs started here in the Twin Cities. The Venn Foundation, and one of our founding shareholders, Jeannie Voigt, has been a pioneer in those program related investments and that unlock. And Carba is one of them. We can say all that because this is all public information, but I would encourage people to really get out there and like to know and understand all of these things, because pure equity can be a good fit for some companies. Pure debt can be a fit. Stuff in the middle is probably the best fit for most. And that's the lane we play in. Hill Capital at its core is a hybrid of equity and debt. I architected this thing to be the best of both worlds. It's got the community and the things I want from equity relationships, but it has the mechanisms to be paid back over time, so it lowers the cost of capital, and it's more flexibility to give more options to the founders and the owners. And so there's a lot there. With my punchline advice for people is to take the time to like learn and understand this, because it's one of the things that founders in the early days can leave a lot of money on the table if they don't understand all of these things, and they can pick really bad partners and it can be ugly. Yeah. That's why I'm happy. I would encourage anybody, like, reach out to me, Patrick at hillcapitalcorp.com. Anything, people, I'm happy to like spend some time or point people in the right direction so they can understand some of these things and not fall into traps, irregardless if it's a prospective investment for Hill Capital or anything else. Mm-hmm. I'm sick of seeing founders and owners being duped, is the problem with a lot of capital sources.
And so you said get to know your numbers.
Yeah.
And one of the things that we see, particularly with mission-driven founders, right, is oftentimes they start the endeavor because of the mission, right, because of the heart, because of the caring. They might be a creative type, and so they might not be native to numbers. And so if we have listeners out there who are thinking, okay, my business is kind of stalled out, maybe we're in this kind of 1 to 3 million phase, we just can't get over the hump, we can't get to the next level, but I'd really like to grow my impact. If they wanted to reach out to you and have a conversation, what numbers should they prepare before coming in? Like, what does it mean to know your numbers?
Well, know them the best that they can. And I would say people don't need to know their numbers inside and out before they reach out to me or anyone else. They can get a mentor through SCORE, or there's a lot of different organizations where they can find mentors. And one of the best is go have conversations with other founders, other people who are in the similar seat, and then continue to lean in and get to understand and know some things the better. The benefit to knowing it better before having conversations with me or anyone else is that they're going to get faster to the root of what is most impactful to them. So if they can go use ChatGPT or have conversations with others to go get some of that baseline stuff under their belt first, it's going to be a lot easier and quicker when it comes time to talk to a potential investor or source of capital.
Excellent. And of course, they can pick up your book, which you did a nice job of plugging in there.
Yeah, I don't necessarily... This isn't about plugging my book, but it was written very intentional for founders, entrepreneurs that don't have a lot of background in finance. It's written in very plain English and to help them understand how to know their numbers and how to find capital sources.
That's an awesome. If you have a copy of it, you could put it up on the screen right now. We could, yeah.
Let's do it. There it is.
All
Pretty
right.
orange book.
Excellent. Oh, it sounds like a great resource for the entrepreneurs. Thank you.
Yes.
So you also mentioned the creativity and the variety of vehicles, like the flexibility that you're in search of to support different types of ventures. One of the things we hear a lot, especially with climate and sustainability focused ventures, is that they're searching for more patient capital, right? Mm-hmm. Because the timelines of nature, let's say with agriculture specifically, right, moving to a regenerative method of farming takes years.
Yeah.
Right. And so where can those sorts of entrepreneurs find more patient capital that is going to work on those sorts of timelines?
So I love the concept of patient capital. There needs to be more of it. I would also encourage people to maybe think about like evergreen sources of capital. So to kind of extend that thinking to say, well, it might not be necessarily like they're going to give me the money and I'm not going to like somehow give it back for 20 or 30 years, but how could this be an evolving relationship where maybe there's some money that comes in and out over time? I think it's kind of important to keep that construct, because things that take a really long time, there is money for that. And there are some equity investors who are willing to do that and to really take a long view, but it's really, really hard because absent it being a grant or a donation, if it's structured where it needs an economic return, that money needs to come back in some way, shape, or form. And the time value of money is very difficult. It compounds really fast. And so if I'm an equity investor, like a traditional venture capitalist, and I'm going to put in $1 and I'm not going to probably see a return for 10 to 12 years, I need the opportunity to get at least $10, if not $100 back. Now, if I push that out to 20 years, we're talking about a like bare minimum, like a 25x multiple, right? The numbers get huge really, really, really fast. And so I don't want to necessarily have to have people think about like nerding out on the numbers, but they have to keep in mind the time value of money and how that impacts things. So let me draw some analogies. I've seen it in climate tech, definitely, but I've seen it the most in healthcare, where somebody is developing a device that's going to be implanted in the body. And that can take, just regulatory approval from the day of an idea till the day it could be commercially available, probably minimum of 10 years these days with the FDA and so forth. So there's a lot of other models out there that one can kind of look at. So when I've seen med tech companies do this type of thing, they're also relying upon other income sources along the way. So I helped get a company going here in town that was started out of the University of Minnesota called Matrix Medical. And what they did is they started processing and selling tissue as they were working on their core technology to recellularize organs, which was a very long road to be able to get there. So they're able to build and generate revenue along the way. And so that's how they were able to bring in investors and to do some other things along the way. So if somebody's got something that truly is a moonshot, it's going to take a long time, I would highly encourage them to think about other revenue sources or things that they could do to tie in along the way and how else they might finance it. Because just finding someone to say, here's some money and I'm not going to worry about being paid back for 20 years, they're out there, but it's a tough ask. It's a tough lift.
So where's the, you had mentioned earlier that you built Hill Capital in this specific way for these specific reasons, and you're sick and tired of, seeing founders being duped.
Yes.
And, part of that is there's obviously probably some predatory practices out there.
100%.
The other end of the continuum being, a mission-driven founder just doesn't know what they don't know. And so they can make, mistakes accidentally just simply out of ignorance.
Yes.
So, for like a mission-driven leader out there who's trying to run a solid business and is trying to maximize their impact, what are some of the key things that they need to be aware of in this landscape if they're going to go start having conversations around seeking funding?
Well, I'm happy that you brought up predatory, because it's actually something that I've started talking to ownership groups about and corresponded with the Federal Reserve about. The whole world of private credit, which is, call it non-bank lending. So, and you're probably getting a bunch of like text message and email, phone call solicitations on a weekly basis, because basically everybody is these days. It's nuts. But that market has grown so much, it's become an absolute playground for very predatory practices. Some of our portfolio companies have gotten entrapped by these. And even more so, we've seen a number of deals that have come to us where founders have gotten entrapped, where they think they're getting a line of credit that it's not cheap, but it's not ridiculous. It's like, 17%. Cost to a line of credit, and then all of a sudden they take these things down and they realize they're getting tranche term loans that start at 42%, and they're being duped into these things. And so, and these are these alt lenders that make it really easy to go click and take the money and tie into accounts and so forth. And so I would tie that all back to, bringing money into a business is not easy. If it feels easy, one should just throw a little caution to the air and double check and triple check. And especially talking to other peers, talk to other credible sources of capital, like a banker at a community bank or other well-known and established investors, to think through and to double check these things. Because I've seeing a lot of businesses that are going out of business because they've fallen into some of these traps and they can't get out of them without starting over. And so the other thing that I want to point out, Ian, with mission-driven founders is it's really important to have a mission, but it's as critical to have a long-term vision to like where and how all this plays out. Because I've seen a lot of things where people think that they've got a mission to do well, but it hasn't been fully thought out. And so a lot of times it's things that can start as mission-driven can probably cause more harm than good, because it wasn't fully thought out. Like there's a really interesting case study about Tom's shoes. Are you guys familiar with the innovators in the buy one, give one? Tom's shoes, really interesting case study. There are a lot of people that think their business model has actually created more damage than good. because what's happened is they go give all their shoes to a local economy in Central America or wherever, and guess who got harmed by that? All the people who were building shoes, creating shoes, selling shoes, fixing shoes, because all of a sudden somebody came in and dumped, 5,000, 10,000 free pairs of shoes in their local economy. And so I just want to kind of bring that up is like, I love the idea of like buy one, give one, but I'm also want to be cognizant that one has to kind of think through all of those things and how all these things are going to tie together. So that's why I've always been a very impact mission, person myself. But the unlock for me and what I planted a seed on in my book is really around vision. And then the vision ties into what does this really look like and what are you trying to achieve over 20 to 30 years and kind of thinking through what all the impacts are as this thing builds and grows. So you're aware of the good and the bad. I don't think anything is just net positive. Nothing is. Everything has it's like I always think of a squishy ball. You can squish one end, but it's going to push out on the other. There's impact to everything, good and bad, but it's being cognizant of all that so people don't accidentally find themselves as setting out for a mission, all of a sudden look back and be like, oops, I just actually created more harm than good. And I think, we see that a lot with climate tech. I was a very early, helped with a lot of project finance around, biodiesel, wind, solar. I've seen all this. I've done all the economic models, right? And it's always, again, I think of it as a balloon. You can argue both sides of wind, solar, of course, coal, all that type of stuff, nuclear. They all have their pros and their cons. So one just has to be kind of cognizant of the full arc and what one wants to accomplish is how I think about it.
So, Patrick, obviously, you're really passionate about entrepreneurship and about supporting entrepreneurs in the best way possible and helping them navigate things properly. But how did you end up in this place? How did your career lead you to be this sort of advocate for the entrepreneur?
So my career started in the late 90s, early 2000s. And coming out of college, wide-eyed, bushy-tailed, and had this naive view on the world that, Wall Street was a well-oiled machine that was helping finance, anything and everything a business could need, whether it was small or big. And as my career got going, then I saw how it's not a well-oiled machine. And it's very well designed and helpful for the really big companies. And then it gets really difficult and hard the smaller the businesses go. So that was kind of the early realizations I had as a young person entering my career. And that's where I love working with owner-led businesses, founders, entrepreneurs, and really wanted to help see them succeed. But it's really challenging. But then also realizing like how just doing preferred stock or common stock or some of these traditional tools that people use to finance them were not really well set up and optimized. And so that was really kind of the catalyst to a lot of thinking that was very foundational to what became Hill Capital, is to really be more thoughtful about balancing the needs and what's good for the founders, the owners, and the needs and what's good for the investors and the LPs that need and deserve a respectable return on their capital. And so that was kind of the evolution of how these things have come together, because most of the world of finance is very transactional. And that's what harms a lot of things. And you guys see that in your work as well. It's very different when somebody's trying to be part of a team long term versus somebody that parachutes in to get something done in a short period of time. Mm-hmm. But that's a core issue with finances. It's very transactional. And that's why I love being on the investor side, because we can really do things that are focused on building the benefit long term and creating true value, lasting value for that business long term.
Yeah, it's great to have a voice like yours on this show so that I think entrepreneurs can hear that there are investors like you who have that approach and have that mindset, and and to feel like they have someone on the investment side who's on their side. So
yes.
So we appreciate having you here.
Yeah. Well, that's the big idea is transparency. That's why it's a core value, but help kind of think through things.
Yeah. So given that chance for you to humble brag, Patrick, talk to us about some of the big successes or things you're really proud of so far with Hill Capital.
Well, I'm really proud of our team and everything that we've done to develop our investment structure and the relationships that we've built. We host a number of gatherings every year. One of them that's open to the public is our Hill Capital Summit. So we bring together 120 people, and those have been wonderful events. Our one that just happened in November, it came back with an overall rating of 9.7 out of 10. And it's just rare. I do a lot of events for other organizations. It's just really rare you get those types of ratings. And I'm really proud of our team, really proud of what we've built. And most importantly, I think the humble brag is we set out over 10 years ago with a tough mission ourselves to do something different in the world of finance that was not going to be an easy path. And it hasn't been, and it's still not. But we've absolutely laid the foundation to achieve our vision of investing in over 500 businesses by the year 2040. And I'm very proud, again, of our team and everything we've done to really lay the foundation to really increase our odds of achieving that vision.
And I don't mean to, ask a parent which of his children are his favorite, but do you have any portfolio?
I tell all my kids all the time who's my favorite.
Okay, right. So do you have any portfolio company successes that you're really proud of?
Boy, there are a number, and a number of them for different reasons. But one of our first investments was in Go Route, like Rowley, based out of Mankato, or excuse me, out of Rochester, Minnesota. And Mike had 100 teams using his sports technology, and he had a vision to grow it to over 500. And not only did he get over 500, he's now well over 1,000. And he's doing exceptionally well. So it's people like Mike who, when COVID hit, literally their football teams at the time were their primary users of their tech. And literally, in April, May, the conversations we're having with Mike is like, what happens if there's no football this fall? We're toast. And Mike had the fortitude and the vision to really continue sales and marketing, build relationships with coaches. And it was a scary time, but saw it through. So I think those are the ones I'm probably the most proud of is, the people who get hit with hard times. And I could probably speak to a hard time I know I can, of all of our portfolio companies that have faced. But when you really see that grit and determination to get through those hard times, it's real impressive. And that's where I have the deepest respect and hands down my most favorite. Like my own children, right? When they do something hard, that's probably when they become my favorite. I'm the most proud when you see them do something hard and they get through the other side. It's pretty cool to see.
Okay. And on that note, what are some of the potential challenges ahead for Hill Capital?
The challenges ahead for Hill Capital, there's a number of them. There is and will and need to be a lot of changes in the overall funding environment. There's a lot of these predatory lenders that are out there, and there's going to need to be at some point additional regulations that come into place, and I'm sure that's going to affect a lot more people than just them. We're going to go through choppy times. The Small Business Administration they've got more and more defaults happening on their SBA loans, and that's going to impact the banking sector, and that's probably, I believe it's going to be some challenging times ahead for our economy. Hopefully it stays to pockets and so forth, but I think there's growing systemic risk that it could be a bigger problem for all of us. So there's definitely those big challenges, like what that environment is going to be that we'll see through. But again, we've been building our processes and our systems where, we've had tough times. We've had companies that have gone belly up, and we know how to handle, challenging times, and we're well prepared for it. But still, these things will continue to build and evolve. But net, I'm extremely optimistic. Again, we started with this is don't bet against the United States. The net effect that we've got wonderful things going in the American economy, but there'll always be political influences, environmental, regulatory, all sorts of different issues that we have to face. But we have a very resilient overall long-term economy. So overall, very optimistic, but without a doubt, we'll have some punches along the way.
And it seems like you're prepared for it, and that's part of your ethos anyway, right, Patrick?
Yeah, and I think it's really important because you think about this in the environment, but he talks about sustainability. This is what we talk about at Hill Capital all the time, is sustainability. We're not doing anyone a favor if Hill Capital goes like this. And I think that's been a problem for a lot of funds over the years is up until recently, I knew more funds that came and went. There's a lot more bodies in the deserts than there were survivors. And that's not helpful to anybody because people bemoan that there's no capital available to them. So founders are always like, I need more capital. Well, it's because funds in the past didn't really have a long-term vision, a long-term plan of how they were going to be around in 30 years. They raised a bunch of money. We were in a rush to make a bunch of investments. They didn't do as well as they had hoped, and so the returns were mediocre, if not negative. And then so investors didn't want to put up more money, and all of a sudden they're gone. And that's not helpful to the economy, to the community, to the ecosystem. So just like we need to think about sustainability from an environmental standpoint, I think sustainability from business practices, and for us, capital is very important.
And as you say, right, operating with a resilient structure is how you're going to have the impact that you actually seek in the world, right?
Well, exactly. Yep, that's how I think about it.
Yeah, man, we are speaking the same language today, Patrick.
Yes.
Yeah, so I want to double click here. And I know we're getting, maybe this is a little bit out of order, but I want to double click on that point exactly. Like, we get this as well, right? In order to have an impact, in order to have the impact that you want to have, social, environmental, otherwise, you have to be able to operate, with fiscally sound principles. But Patrick, what do you say? What do you say to the argument or the narrative out there that like there is inherent inequality in the financial system? And you had also mentioned earlier that Wall Street is really well set up for the large organizations, but becomes more and more challenging for smaller organizations. Because if the deck is already stacked against a small business owner who's trying to grow, like what are your thoughts there just about the equality of the financial system and how to navigate it as a small business owner who's, trying to grow?
Ian, for me, it's all about incentives. I don't think it's necessarily a bug, it's a feature. It's reality. There will always be inequalities, and the challenge, and it doesn't matter if we were trading seashells by the seashore 5,000 years ago or gold pieces or today US dollars or Bitcoin, there's always those inequalities, but it's a lot of the mechanism of the movement of money, the incentives to move money, so on and so forth. And so Wall Street, most people on Wall Street look at me and say it's about the dumbest thing ever. Like, why are you going to spend that much time putting an investment of $250,000, $500,000, $1 million to work when we do as much work as the banker on Wall Street that's doing a $50 or $100 million deal? I would actually argue sometimes we're doing more work than a lot of times these large venture rounds. So it doesn't feel right. But that's the challenge. That's the inherent challenge, is because bigger money can move. And so then there's more money to be made for all parties. And so that's where all the resources are naturally going to flow. So that doesn't bother me one iota. I think of that as an opportunity. I think of it as an opportunity to help, think through how to build in efficiencies and things that can be better for the people and the organizations that are not well served by what's existing in the world. Because if these things were all figured out, I wouldn't have a job. Mm-hmm. I wouldn't have something to do every day. And if you think about like all the entrepreneurs who are showing up and doing something, they're showing up and doing something because there's inherent inequalities, inefficiencies, something built in, and there's an opportunity to make something better. Mm-hmm. So by definition, I don't want to see inequalities, but I also appreciate that those are the opportunities for us to all continue to row the boat together to make those things better. So they actually excite me. If there's a problem to be solved, that's why I get up every morning and work on the problem I'm solving with the capital gap with entrepreneurs.
Yeah, I think I appreciate it. And obviously I'm taking, an active stance of the devil's advocate here.
Sure. Yeah.
But I think it was important to bring up because we often have this conversation and see this in our work, right, with mission-driven organizations, is that there's this inherent tension between, okay, we need to run a sound business, and that involves sound finance, but we also have these, social or environmental values that are driving us that sometimes feel at odds with the financial realities of the situation. Mm-hmm. And I think it's just it's a complex dynamic. And I don't think that there's a magic bullet or an easy mystical way to navigate it perfectly. But I think it is one that's important to name and just call out, because as entrepreneurs, we're constantly, you use that term rowing the boat, right? It's like we're constantly rowing the boat in choppy waters, trying to figure out what is the best path forward, considering the conditions of the time.
I agree. And that's why we need brilliant people out there solving and working on these things. It reminds me of when I was at Northland Securities building the capital markets. I jumped in the elevator after a long day and rode down the elevator with the chairman of the firm. And Tom asked, he's like, "Oh, how's it going, Patrick?" And I bemoaned a deal that was having trouble and all that type of stuff. And it was like out of a movie. The doors opened at the bottom. He looks at me and he goes, "Patrick, just remember, if it wasn't difficult, we wouldn't need you." And he walked out the door. And that stuck with me forever. That's what motivates me every day to work on Hill Capital. That's what excites me. It's hard, it is difficult, and it's worth working on.
We have had those conversations internally as well.
Yeah.
Ian, if they didn't have problems, they wouldn't need us.
Yes.
And thanks for going down that rabbit hole with us, Patrick.
I love it. Yeah.
Yeah. Okay, so we like to end all of our podcasts with the same several set of questions that we adapt accordingly.
Sure.
So, what is one of the highest leverage system level changes that would help support entrepreneurship and small business growth? If you could wave a magic wand.
System level would be more of a focus on vision. And that's why my next book is going to be entirely dedicated to magnetic vision and how vision creates value. And I think a lot about this because mission driven is very important, and mission often asks, what do we stand for? But vision takes it to the next level and says, what will exist in the world if we succeed? And I think really that leverage point around vision is really, really important. And that's what we think a lot about at Hill Capital, and I think a lot about in my work.
Thank you, Patrick.
And then what about an individual level thing that consumers could do to support small businesses and entrepreneurs other than the obvious step of buying their stuff?
Gosh, I don't know, but I am a big believer in just people being aware. I really tire of the whole, people want to make heroes or devils out of large organizations, small organizations. I respect people's decisions on where they want to shop and spend their dollars. That's completely up to them. But I do hope people will think holistically about things and just be aware and continue to learn and be aware. And I just think that's the tide that lifts all boats.
Hear that. And that is what we're here to do at the end of the day, right? Lift all boats.
Yes.
Yeah. Well, Patrick Donohue, it's been a pleasure having your perspective on the show. Really appreciate your time today.
Yes, likewise. Appreciate all the work that you guys do. Thank you, Justin. Thank you.
Yeah,
Ian.
it's good. Yeah, feels like we're on the same team here today.
Yes.
Yeah, thanks for the time. Thanks for the pragmatism.
Yes.
All right. Patrick Donohue, it's been a pleasure. We'll see you next time.
See you next time.
Big thanks to Patrick Donohue for being our guest today. You can learn more about him and Hill Capital at hillcapitalcorp.com. And if you're a mission-driven leader looking to grow your impact, you can check us out at stillpointinsight.com. Thanks for listening, and we'll see you next time.